Hello and welcome to our discussion of managerial accounting as the introduction. In this lecture, we are talking about some of the differences between financial and managerial accounting. When we're talking about accounting, when you're first going into your early accounting courses, we talk about accounting broken up between managerial and financial accounting. Now, depending on which college you go to, sometimes you're required to take financial accounting first before you go into managerial. In other cases, it really doesn't matter. You can take either one first. And the reason for that is that there's not an absolute requirement that you fully understand financial accounting before you head into managerial accounting. There are a lot of differences between the two, and they build maybe to a slight extent on one another. But again, as far as order, it's not really all that important. So let's talk about accounting, which one is used for what purpose. With managerial accounting, as the name implies, management is going to be the group using this information to make decisions about how to run the company. So they're not talking about whether I should invest in the company or whether I should lend money to the company. They are instead talking about how do I run the company? What decisions do I make to make sure this company is the most profitable, most successful, will continue into the future, all of that. So the key thing to take away from this is that managerial accounting is generally the type of information used solely by internal users. Now, what we're going to see later on is that there's a little bit of this information that carries over to financial accounting, specifically inventory and cost of goods sold, but that's about it. And the main reason for this is that this information is not audited, not nearly to the extent that a financial statement would be under financial accounting. So this is information that should not be disseminated to public users because, again, there's the reliability factor that we'll talk about a little bit later. Now, financial accounting is information used by external users, could be a creditor, could be an investor, to make decisions about whether or not to invest in the company or lend money to it or any of those things that an external user would make decisions about. Now, in this case, the information is mainly for the purpose of external users. When we go through financial accounting courses, we generally talk about usually the investor. That tends to be the biggest focus. Although, again, a creditor, there are other external users as well. Now, that being said, this information can also be used by internal users. And the reason for that is that as management, you want to know how investors are perceiving you. So you certainly want to be well aware of what your financial statements look like because you know that's representative of what's happening in the company. That's what the investors see. If you have a poor year based on your financial statements, they're going to be less likely to invest in you. So that is the main concern there. Now let's talk about the types of reports you'll see in managerial accounting versus financial accounting. With managerial accounting, keep in mind this is used by internal users. This information, we're going to refer to this as a special purpose financial report. These are internal statements and they can vary widely depending on what that particular manager wants. A lot of systems, a lot of accounting systems that are geared toward managerial accounting, you'll see several templates to start with, but you may also have ad hoc reports. So, in other words, what management wants may very well change from time to time, and it'll certainly change from manager to manager. There are some standard reports that most every manager would want to see, but there are a variety of very unique reports that can be tweaked based on what that manager wants. So they're special purpose. With financial accounting, we're going to talk about 4 core statements that are required. The income statement, the statement of owner's equity, also referred to sometimes as the statement of retained earnings, the balance sheet, and then the cash flow statement. Now, these are general purpose financial statements, so they're used by a variety of users. And the interesting thing, although there are a few options for how to present certain things, for the most part, if you go from one large company to another large company and compare their statements, the format will be very similar. And that's done on purpose to ensure that investors that are trying to compare those two companies can actually compare them. If they have statements that look completely different, the format, the subtotals they get, all of that, it would be very hard to compare. So the whole goal of financial accounting, or one of the main goals, is allowing for the ease of comparison between two separate companies. So now let's talk about the timeliness reports, or this may also be referred to as frequency of reports. With managerial accounting, we're talking about very timely or perhaps very frequent reports. Actually, both come into play. Now, what I mean by this is they need their information very quickly. So they can't wait for a full-blown audit to extend that deadline 2 months or so. If they have a request for a report, sometimes you'll need it by the end of that day. Now, how frequently do they need these reports? So we have the standard ones, the annual reports, quarterly reports, monthly reports. Those are pretty common. But you're also going to see weekly reports, daily reports, and sometimes even hourly reports. If you've ever worked at a fast food restaurant, or maybe even probably mostly the restaurants, but possibly a store as well, a lot of times managers will request a labor report, which basically compares labor to the sales that have been brought in during that period. If the sales are lower than expected, a lot of times they'll give someone an early off. They'll let them go home early because they don't need all the labor around if no sales are coming in. You could have daily reports for your daily sales. You may have inventory reports coming in. Just a variety of different reports, but again, these are going to be geared toward what managers want. They're very timely. We're not going to spend a whole lot of time double and triple checking the accuracy of them because we need it quickly. With financial accounting, we're not talking about nearly the level of detail as we are with managerial accounting, so it's high-level summary data. It's not going to be needed as frequently. Maybe quarterly, annually. You may have some monthly reports as well, but they're generally not going to be audited. And again, if we're talking about the financial statements. In fact, the quarterly reports won't be audited either. It's the annual financial statement where we have the full-blown audit. So now let's talk about what reporting standards do we have to follow when preparing these reports, preparing this information. With managerial accounting, keep in mind, this is mostly for the purposes of internal use. So the whole goal of a set of reporting standards is to ensure that the information is accurate, to ensure the information is comparable, it's consistent. If management themselves is using the information and it's never getting out to the public, there's really no need for any standards like that. The thought is that if management wants to lie to themselves, who are we to stop them? They're just hurting themselves. There's no incentive for them to lie. Now, there are some exceptions to managerial accounting not requiring reporting standards. There's a board known as the CASB, the Cost Accounting Standards Board. And I guess that's another good point. When we talk about managerial accounting, we often get into the area of cost accounting as well. The two somewhat go hand in hand because we're talking about inventory, costs of overhead, all of that. Now, the CASB, Cost Accounting Standards Board, may be used in some situations where there's a government contract that's based on cost, or if there's an insurance policy reimbursing you for cost. In those situations, they're not willing to just rely on management's information themselves on cost. They want to make sure certain standards have been applied. As you can imagine, management there would have an incentive to overstate cost if they're being reimbursed on cost. Therefore, we want to make sure that's accurate. Now, another example that I work in the Medicare audit industry, and we audit hospital cost reports because some hospitals are reimbursed based on cost through the Medicare program, through the government. So again, we want to make sure that their cost is accurate. And as you can imagine, the majority of the cost issues are arriving from overhead. With materials and labor, as we'll see in later lectures, it's very easy to assign costs to particular products or departments, but overhead, you have to figure out the best way to allocate it. And again, without going into too much detail right now, there are a lot of issues that can arise. That is where the Cost Accounting Standards Board really comes in. Now again, the reason we're not using reporting standards, one of the reasons is that the timeliness of data is more important than the accuracy or reliability. So now let's go to financial accounting. With financial accounting, you're going to see very stringent standards applied. These are referred to as GAAP, Generally Accepted Accounting Principles. And this GAAP term is just a general reflection of the rules of accounting. That's an easy way to think about it. The reason for these standards is because accuracy and reliability in financial accounting is emphasized over timeliness. We'll wait a while to make sure everybody follows the standards properly. We'll wait a while for the audit. We want to make sure the information is correct so that it does not mislead external users. So now we'll move on to the focus of the data. What are we trying to focus on here? With managerial accounting, we do use past data. That's a starting point. But the concern of a manager is predicting what's going to happen in the future. It's not enough to say, well, we were successful last year. Good job, guys. We want to know, what does that mean for the future? What do we have to change for the future? That's the key thing. Most of managerial accounting is geared toward making changes for the future. Now, we're going to also focus on very detailed information, although we can't lose sight of the big picture, but we will see much more of a focus on detailed information in managerial accounting than we do financial. Now, with financial accounting, our core goal is reporting on what has happened, reporting on the past, reporting on historical costs and revenues. Our goal when we prepare financial accounting reports is not to make predictions. If the investors or the analysts want to make predictions based on the information, and they certainly will, that's completely up to them. Our goal when preparing financial accounting reports is just showing what has happened accurately. In addition, with financial accounting, we're not nearly as focused on the details. We're more focused on a high-level summary because we don't want to drown investors in the details. They just generally don't need to know that to make decisions about how successful the company was. Managers need to know the details because you can only make changes at the detailed level. It's great seeing the big picture, but you can't really make changes at the big picture level. You have to figure out what do you have to tweak, what individual item do you have to tweak. Thank you for watching my accounting video on YouTube.com. I hope you've enjoyed that information. Accounting can be a difficult topic to conquer, and sometimes you just need additional information or assistance outside of the classroom. If you feel like you need some additional information, some additional resources, come visit my Udemy.com course. I have a variety of financial and managerial cost accounting courses available that may be able to assist you if you're having trouble with a particular course. In these courses at Udemy.com, I have additional lectures on a variety of accounting topics. We also have downloadable Excel templates for all of the various practice exercises we work, as well as a video walkthrough of the solution. I continue to update these practice exercises, so even after you join, you may see some new exercises. It's all geared toward helping you to understand the topics. So in addition to those additional lectures and the practice exercises, we also have quizzes and tests to help gauge your understanding of the topic. That may give you a better idea if there's something you need to go back and learn a little bit more about, read more about, watch a video on. We also have downloadable study notes that really try to drive that home. There's a downloadable textbook with it. So feel free to come join this class, come take a look at it. You can find this at udemy.com if you search for Severson, or you can just Google Severson Udemy Accounting to see a list of all the courses that are currently available. Again, I'm working on new courses as we go. Right now, you'll see some financial and managerial accounting courses out there. I'm working on the intermediate and advanced side of those particular courses as well, so you may see new ones out there as well. Now, email me for a special 50% off coupon code. You can send an email to chrisseverson@hotmail.com, and I will respond with that code. It's a different code for every course, depending on which one you want. I can also respond with the actual link to that course. Now, all courses at udemy.com have lifetime access, and there's also a money-back guarantee if you're not satisfied. So come check out my course at udemy.com and see if it may be a fit for you. Thank you for your time.